every 80 years you have a cycle of a crisis cycle where the rules change. The last one before this was World War II and the Depression. Before that was the Civil War in 65. Before that was the Revolutionary War in 76, started in 76. And so every 80 years, kind of society gets thrown on its ear and a new set of rules come out of the other side. And I think we're at the end of the 80-year cycle, that started post-World War II when we had fabulous growth and the United States was on top of the world. If that's the case, that would imply that, we will resolve this cycle sometime late this decade, early in the 2030s.
In their 1997 book, The Fourth Turning, An American Prophecy, authors William Strauss and Neil Howe introduce the concept of the fourth turning, which describes a recurring generational cycle in history divided into 4 phases or turnings, each lasting about 20 to 25 years. This cyclical pattern spans roughly 80 to 100 years, with the first turning known as the high, a period of recovery and consolidation after a major crisis. This is followed by the awakening, during which society undergoes a spiritual revival or cultural upheaval, similar to the cultural revolutions of the 1960s and 70s. Next comes the unraveling, marked by societal breakdown, increased political polarization, and a strong emphasis on individualism, leading to the fourth turning, or the crisis phase, where society faces significant challenges. According to Strauss and Howe, the current fourth turning began with the global financial crisis in 2008 and is expected to last until the mid-2020s, culminating in a complete breakdown and inevitable societal reorganization. In a recent interview with Simple Bitcoin, sound money advocate Lawrence Lepard discusses the impending financial crisis and the importance of hard assets like Bitcoin and gold in this transformation. Lepard argues that society is on the brink of a political and economic collapse, which will result in the dismantling of existing systems and the establishment of stronger frameworks to guide humanity through another full century cycle. Lepard believes that one of the first systems to fall will be the fiat monetary system, which is already showing signs of distress. To rebuild, he suggests that the world will increasingly turn to hard assets like Bitcoin and gold, which, unlike fiat currencies, cannot be created out of thin air. He predicts that this rebuilding process will trigger a massive surge in the prices of these assets, driven by growing demand as investors recognize that the entire monetary system is fundamentally broken. Before we continue with the rest of the video, do check out Daily 5-Minute Crypto Newsletter with all the latest crypto and Bitcoin news. It's a fantastic analysis of on-chain crypto data and breakdowns, and the best part is it's absolutely free. They'll cover expert predictions, breakdowns of on-chain crypto data, and any breaking news you need to know, all in a nutshell. Click the first link in the description and enter your email to join over 50,000 others in becoming a better crypto investor right now.
There's $900 billion of fiat assets, right? I mean, real estate, stocks, bonds, cash, you name it. And there's $1 trillion or $900 trillion of fiat assets. There's $1 trillion of market value in Bitcoin. There's about 12 trillion, maybe a little more now that gold's up in gold, but really only about half of that's for sale because a lot of it is in jewelry and museums and so forth. And so call it 6 trillion. I mean, that 900 trillion is getting debased every year, everywhere, because money supply is growing. So as Preston says, there are more monetary units chasing the same goods and services. And so, as that 900 trillion starts to worry about their debasement, they're going to start to choose a form of money that can't be debased. And they really only have 3 choices, Bitcoin, gold, and silver.
Yeah.
And so all of which represent money. And so, that is going to, in my opinion, drive the price of all 3 of those assets to levels that people today can't even imagine. And I get it because, they look backwards and, fiat has been relatively stable for a relatively long period of time. I mean, the U.S. hasn't had hyperinflation since its founding, and it had high inflation during the wars and particularly the Civil War. But people they look backwards and think, well, I'm good. This is America. This is the dollar. It's going to be okay. And yet, if you look at the policies that we're following, if you look at the deficits that we're running, if you look at the way we're printing money to support those deficits, these are the kinds of things that when they're done in other countries that don't have the world's reserve currency, they lead to inflation, sometimes to hyperinflation. And we're doing the exact same things. Now, other people say, well, we've got all the military, we've got all the guns, blah, blah, blah. Well, fine. But unless, we want to start a world war and force people into using our money, which I don't think we're going to do, people have the choice on what money to use. And everyone has a choice. Everyone wakes up every morning, they can decide, where am I going to put my savings? And we're going to leave them in the bank. We're going to buy a bond. We're going to buy a stock. whatever, or we're going to buy gold, silver, or Bitcoin. And, look, some Americans are figuring it out. I get a kick out of the fact that Costco, every quarterly report I try and listen to their earnings report, and they talk about how many gold bars they're selling.
Oh, yeah.
So, people would say these, average American Costco shoppers, I know I shop there, I love the place, they're buying gold, right? Why? Well, because they kind of know that it can't be debased, right?
Yeah.
And so, that trend, I think that trend is going to continue. So in my view, Bitcoin has no top and gold and silver have no top because fiat really has no bottom. I mean, if it sounds extreme, but I think it's possible. I'm not saying it's a likely case. I think it's a tail case. It used to be an extreme tail case. It's becoming less extreme, but there's a tail case that says that fiat currencies all fail. And under what time frame? Unclear. Certainly could be many, many years. I tend to think it might be faster than that, but I don't want to try and panic people. But my point is that you don't even need fiat to fail for Bitcoin and gold to be very, very good investments on a comparative basis. I mean, since 2000, gold has outperformed the S&P, 500 by quite a bit, and everyone points to the S&P as being your best inflation hedge. It hasn't outperformed the Nasdaq. I mean, the technology stocks have done much better than gold. But there you've got risk. I mean, unless you're dealing with the monopolies. I mean, it's the digital monopolies really are kind of something to behold in terms of the quality of their cash flow stream and the defensibility of their positions. I mean, perhaps someday there'll be something other than Google, but right now, it seems to be they've got one of the most defensive moats I've ever seen in any business.
French Enlightenment writer, philosopher, and historian Voltaire famously remarked that fiat currency inevitably returns to its intrinsic value, zero. He argued that money printing equates to wealth theft, and as we continue to devalue the few remaining fiat currencies by creating more out of thin air, they are hastened along the path of numerous failed fiat currencies in history, often resulting from corrupt and incompetent monetary policies. Over the years, several Bitcoin advocates have likened the fiat system to a massive Ponzi scheme that is rapidly unraveling. Like all Ponzi schemes, it is destined to collapse and reach zero. While this may not happen immediately for currencies such as the United States dollar, the continuous printing of new debt to address old debt only deepens our descent into a spiral, bringing us closer to a currency that is essentially worthless. During his interview, Lepard addresses the concept of the fourth turning and the looming crisis, suggesting that we may have only a few years left before everything fully unravels. Here are more clips from the video.
It's amazing to me that nobody in Washington is talking about it. I think they're just pretending it'll go away, or they won't react until they have to react as a result of a crisis. I mean, I think we're at the end of the 80-year cycle, that started post World War II when we had fabulous growth and the United States was on top of the world. And I marked the beginning of this fourth turning as 2008. Because that financial crisis really kind of kicked it off, right? I mean, it was huge. It was worldwide. It was significant, and the financial system nearly failed. And these cycles, they vary in length, and the model's not perfect, but it if you look at them, it tends to suggest they last kind of 20 to 25 years. Some are shorter. The Civil War was shorter, although you could argue it started earlier. The point is that if that's the case, that would imply that, we will resolve this cycle sometime late this decade, early in the 2030s. And that kind of feels right to me. I think that, they're going to continue to print money. I think that inflation is going to come back. And I think that as time goes by, more and more people are going to become aware of this as an issue. I mean, we're seeing, people like Elon is aware of it. RFK Jr. is aware of it. He tried to make Trump aware of it. I think he kind of is. I don't know that he knows what to do about it. But the point is that I think that, it's going to become clear that the money is broken, as the title of Lynn's book. And as that becomes more and more clear, I think that, we'll start to look for solutions. And it could be a monetary reset. That's what Roosevelt did in the 30s. It could be, a slow transition, a gradual transition, hopefully a painless transition to a more sound money system. I'm not sure, it's going to take real skill and real political leadership to pull that off, but it's possible. I think the alternative to that is we're just going to keep driving the car as fast as we can until something blows up. And, they have the big print where, the Fed balance sheet, if you've noticed, is kind of, pre-08, it was at 900 billion. 08 kicked it off, and Bernanke grew it up almost to 4 trillion. Then they brought it back down a little bit, and then COVID hit and they took it up to 9 trillion, brought it back down to 7. I mean, the next one, in my view, takes us to 25. And, the good news is we might all end up being millionaires. The bad news is gasoline might be $20 a gallon and a hamburger is going to cost $100. I mean, that's kind of the way we're going and that's why I say it's really just all math. I mean, it's, in a debt-based system where you need debt for growth and you need to service that debt, and the underlying productivity and GDP is not growing at a rate that's fast enough to support the debt. The only way to fill the blank, or to make the numbers square, is to print more money. And which you can do, and we've done, and it's not uncommon. But by definition, you're not printing goods and services. So you print more money, you have the same goods and services. We're all competing for them. The cost of those goods and services is going up. And so that's the underlying problem. And really, there's nobody in Washington talking about how to address it or solve it, which is very unfortunate. But, like I say, I'm hopeful that, things like, my book, other books, knowledge, I mean, even the mainstream is starting to say, talk about this a little bit more. I mean, you're seeing it creep into a lot of different discussions. And I think, in 5 or 10 years, it's going to be common knowledge that this monetary system is broken. And, just completely broken.
Currently, the United States faces approximately $200 trillion in funded and unfunded liabilities, supported by only $7 trillion in assets, alongside shrinking tax revenues and escalating debt expenses. This situation has prompted individuals like Lepard, who grasp both sides of the financial spectrum, the fiat system, which he describes as nothing more than credit, and the Bitcoin framework, to consistently warn about the risks of relying entirely on what he views as a Ponzi scheme. In contrast to fiat currencies, Bitcoin features a capped supply, is not governed by any single individual or entity, and is underpinned by the most robust computer network available. The US dollar, as a representative of the fiat system, has an unlimited supply, is centrally managed, and lacks backing by tangible asset. When the fiat Ponzi scheme ultimately collapses, there will likely be a frantic rush to acquire whatever remains of Bitcoin's limited supply, driving its prices to unprecedented levels. We invite you to share your thoughts on Lepard's price predictions for Bitcoin, gold, and silver in the comments section below. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.